answer after you cheated, but go ahead.
No, I didn't know the answer. Somebody else.
Who knew the answer to this one?
I didn't know the answer to that one.
I didn't.
Go ahead.
It's Boys in the Hood.
Boys in the Hood with his
All
E.
right.
That's right.
I
Okay.
looked it up on this iPad.
All
in
right,
like
well,
2 seconds.
technology.
That's okay. Oh, by the way, you know what? I forgot to mention this too, but it's only good for this week. So Lighthouse, actually, you know what? It's not going to work this week, so forget that. Forget
Come
what I
back
just
next
said.
week.
Yeah, come back next week. Okay, we are going to get right into email time. Brian, here is one for you we received. If I invest with Praxis Capital, am I investing in a fund or in a specific property? That's a good question.
Yeah, that is a really good question. And for new listeners out there that don't know what it is I do for a living, I'm the managing director of Praxis Capital. We're a real estate private equity firm based in Northern California, and we primarily we manage several alternative investment funds for capturing the unique situation in the real estate market that's going on right now. And we have funds that invest in multifamily property and in single-family property as rentals. And incidentally, there was a comment earlier this month from Warren Buffett. He went on CNBC and said that he would buy a few 100,000 single-family homes if he could figure out how to structure the management. So,
And he could probably do that, too.
and he probably could. And
Indeed.
we started saying that exact same thing about 6 months ago, and we've been buying single-family homes as rentals ever since. And
How many
really,
hundreds of thousands do you have?
We're on our way.
On our
Actually,
way.
our inventory is climbing rapidly. So. Most of the time when people invest with our company, they're investing in a fund. The fund owns the real estate, and they own units in the limited partnership or LLC. We do have some programs where investors can participate in a particular property. It's a little bit of a different structure. So basically the answer to the question is it depends, and it could go either way.
Okay, so you have people have choices.
We have choices.
Brian, I've got a question. Tell me a little bit about your geographic concentration. Are you in the Santa Rosa, Sonoma marketplace? Are you all over California? What's your footprint?
Yeah, our footprint's actually pretty large. We started we have an office in Santa Rosa, and I've been based there for 20 years. We've been operating in that marketplace, and then a number of years ago we expanded our operations. But as a result of the wave of foreclosures that's come upon us over the last couple of years, we've grown exponentially, and now we're basically from the coast to the foothills and everything in between. So we're from Sonoma County all the way to Placer and El Dorado County and everything in between those, and down the Central Valley, and we've just recently done an expansion into Southern California as well.
And do you only go to the courthouse steps?
75% of the properties that we purchase at the courthouse steps at auction, and 25% of the properties we purchase through banks, short sales, probate, and so on. But one of the key components that we like about this business, especially for rental property, is buying homes that are already occupied with a tenant or an owner who wants to stay in the house. And if they're still there when we buy it at auction, we can oftentimes work out an arrangement for them to stay and remain as renters, which we really like that strategy. Buying at auction allows us to employ that strategy. Buying REO, usually the banks have evicted whoever's there.
Well, yeah, especially
So-
the people who are living there are probably taking care of the place if they want to continue to live there.
Yeah, that's right, yeah.
Okay, Mark, we received an email for you, and here it is. Do you always make interest-only loans, or are there loans that you do that have amortization in them?
Oh, okay. And for our new listeners, I'm Mark Hanf, president of Pacific Private Money, and we're real estate lenders for real estate investors. And those of you who buy real estate, you probably know that the banks generally aren't making loans to real estate investors these days. They haven't been since the real estate crash in general. And so the private money lending industry has filled that niche. And in fact, it's one of the fastest growing businesses in the financial sector today is private money lending. And so we make loans to real estate investors to buy real estate in California, to buy fix and flip, or to collect properties for rental income, like Brian was just talking about. And one of the features of the loans that many private lenders make, like Pacific, is that we generally make loans where the payments are interest only. And real estate investors tend to like that because it conserves their cash flow. So when you borrow $100,000 to, say, buy a $150,000 home, which is a pretty common ratio that we use, a 65% purchase money loan is generally the maximum that private lenders will go up to. If you're intending to fix and flip that house, it limits the carrying cost to interest only. So we generally do not make amortized payment loans. Again, we're talking generally short-term loans, so real estate investors for the most part, especially if you're fixing and flipping, you're not looking for a long-term loan. Maybe you're going to have that loan out for 6 months. Although people collecting real estate for rental income, oftentimes they would like to see maybe a 5-year loan, but the way the marketplace is right now, because of volatility, many of our private lenders who are the source of our funds, generally their comfort level is generally 2 years to 3 years for a loan. And again, with interest-only payments, you can oftentimes buy property in many, many markets in the Bay Area where you could still get positive cash flow, positive net cash flow from rental income using a so-called hard money or private money loan where you might be paying interest rates of, say, 10%.
I can attest to that. We're doing it.
Yeah.
Yeah, but the thing that's kind of neat is that I've got two co-hosts here who are in real estate, but they're not competing.
Right.
Sounds
Actually-
like they should be working together.
Yeah,
that's
exactly.
right.
Yeah.
Yeah, that's exactly it. So investors with Brian are investing in an equity opportunity, and some of the yields that they've been able to achieve are fabulous, whereas my investors are generally investing in a financial instrument. It's a debt instrument. It's called trust deed investing, and they're usually solving for fixed returns of, say, 8, 9, and maybe even 10% in certain situations.
Very good.
Exactly.
Sounds very attractive.
Okay, hey guys, we're going to cut to our third and final trivia question. When we come back, we've got some cool economic stuff to talk about.
Absolutely.
All right, here is our third and final trivia question, and again, the theme is gangs in the movies. All right, what were the names of the two main gangs in West Side Story? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. What were the names of the two main gangs in West Side Story? Make sure to include your name, address, and email address, and remember to speak slowly and please spell out your information for us, and we will be right back. Okay,
They have this much fun.
That's
It's
true.
so much fun.
that's true.
That's right.
Kramer, you're having fun, aren't you?
I am having fun.
Okay. And I don't even need
You're
makeup
supposed to be
now.
serious when we're on
No.
the radio.
Yes, of course.
By
This
the
is
way,
a serious
this
business
beard
show.
is going to be gone in about an hour.
That's really, I'm sorry to hear that
Yeah,
the show
pretty frustrating.
must not go on.
Yeah.
Very frustrating.
Yeah.
Somebody,
I'm going to play. I usually don't
Oh.
have this. And
I
I'm
don't
playing.
either,
I'm
but
supposed to be
having
playing Judas.
Who is that
Oh.
for me?
And
That's for him.
don't worry, it's not my normal personality to be Judas, but
So he
I'm usually a
says.
really nice guy.
That's right. So
Um,
you say.
Yeah, but I had my part done and everything, and figured it's the only time I can be a bad guy and be okay with it. But I was teasing my pastor about it. I said, I said I'm going to do such a good job that you're going to kick me out of church. Go, we don't want this guy here. Is this? No.
In fact, he went through his lines last week with.
Yeah, no, that wasn't even close to what it should be.
Well,
Not even close.
Okay, well, we're gonna air that anyway,
Well, yeah, okay.
if
Alright.
we need to filler.
If we need some filler. Okay, guys, what do you want to talk about the last?
Well, Mark's got an article, and I have one, the same one as well, about the CoreLogic report about negative equity in Q4. And so, Mark, if you want to lead off with that one, I can chime in if I have anything to comment about. But the one that I had, in addition to that, was about Fannie Mae REO inventory declining. They just came out with a new report, and there's some interesting comments in there about
Well, the
that.
way I like to couch this stuff always is that, these headlines tend to be, if it bleeds, it leads type of
Mhm,
information,
mhm.
and I don't look at a lot of these reports as being bad news. It's just news, and what's the silver lining? And again,
Yeah.
I think for real estate
Yep.
investors, it's just more, more assurity that look, there's no rush to go out and make your millions in real estate, right now. I think we're going to have a market like we have now for the next 5 years, and I think that's really what
Real
it's
estate
telling us.
market, yeah.
Real estate, that is. I think, in other words, I think we're going to have a steady stream of buying opportunities as a result of the continual resetting of equities. I think more homes are going to enter the foreclosure phase, but it is slowing down. That part is actually slowing down. It's just because there's such a we had that dip in pricing in the fourth quarter, which.
Yeah.
I know for a fact that in markets that I'm lending in, the resale prices went down considerably in some markets in the fourth quarter. And of course that means that more and more people who are living in a home they bought in the last 10 years are very likely to see their equity go down even further. But if they're not going to sell, that doesn't really mean a whole lot. So
Okay, we got 11 minutes and 30 seconds.
Let's go.
So this will be a good one. Okay, so everyone remember your answers that you were going to give? Because that'll be good. You guys ready?
Yep.
Okay.
here we go. Stop reading your email.
I know, right?
Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf and Brian Burke. And when we cut to the third and final commercial break, we asked this trivia question. What were the names of the two main gangs in West Side Story? Now, the audience didn't hear all this, so we're going to go down the list because everyone had an answer. Mark.
The Bloods and the Crips.
The Bloods and the Crips, no.
I thought the Girl Scouts and the Boy Scouts.
The Girl Scouts and the Boy Scouts, no.
The Crips and the Bloods.
Oh, we already
Well,
heard that one.
He had it reversed though, so
Yes.
I thought
No.
it was Cool and the Gang a gang.
Cool and the gang.
I don't
Okay, I know our
I guess
audience
none of
knows
us
this
know.
answer because all of us were too young. The Jets and the Sharks.
What? That sounds
What?
like teams.
That's
Jets
like
and the
hockey
Sharks.
teams.
That's
as
hockey
well.
that's
teams. Yes,
teams.
it was the hockey gangs. That's right. Okay, Mark, you came across a very interesting article.
Well, yes, CoreLogic this past week released a report that, and we've talked about this before, it is the increase in homes in the United States that have negative equity or near negative equity. So
Upside down.
Yeah, upside down, and so it's a report for basically the fourth quarter, and it's essentially saying that in the United States, 23% of all properties with a mortgage were in negative equity in the fourth quarter, and that's up about 4% from a year ago.
That didn't mean that everybody stopped paying on their mortgage.
No, that does nothing. No, that's nothing to do with it at all. It's just the value of their mortgages, the underlying mortgages, whether it's a first or first and a second, is higher than the market value, and you would expect that to happen. So the report's kind of obvious, since we've been talking in previous shows so far this year, how the fourth quarter. A lot of markets, and particularly here in the Bay Area, I know markets that we've been lending in the Bay Area have gone down. Oakland saw some substantial price increases in the fourth quarter. In fact, a lot of people pulled their fix and flip properties off the market in the fourth quarter because it was just ridiculous how low the price offerings were going, and properties just weren't moving again in a lot of markets.
So they turned them into rentals?
Well,
or they
some
just
of
kept them vacant?
They just kept them vacant or turn them in the rentals. But just to kind of continue on, they also talk about an additional 2.5 million borrowers have less than 5% equity. They refer to that as near negative equity. So again, in terms of what that means, California, for us in California, that number is actually a little bit higher. California, we're at 30% of all homes with mortgages are underwater.
Does that mean that they were expecting more foreclosures? Like those people will eventually stop paying?
Well, what it indicates is, well, it's a couple of things. First of all, I tend to believe that we're at or near the bottom, first of all, of the price decreases. I don't expect much
I
in the way
agree.
of price decreases in 2012. So I think this number is a number that might be the high water mark for California if we're talking 30%. What that means for the future is that, if the people continue to pay those mortgages underwater or otherwise, in years to come when prices recover, this isn't necessarily going to be a foreclosure. But what it does mean is there is pressure on the foreclosure market, because if you're substantially underwater, and some people are 100,000 or more underwater in their mortgage, those people often tend to choose to do a strategic foreclosure and walk away. So I still think that there's an awful lot of
But you wonder if the banks at that point would just reduce the principal.
Yeah, they don't want to do it. They don't want to do it.
They'd rather just go through the
Well,
foreclosure.
now you're in this moral, gray area, because now the people that are paying on their loans are going to say, well, where's my principal reduction? So then you run into some problems there. You don't want everybody calling you up asking for a principal reduction. But Mark, one thing I noticed about this report, I don't know if you saw this, but California got kicked out of the top 5.
Right.
California's been in the top 5 of negative equity states since the foreclosure crisis began, and we got booted. So now it was the order is Arizona, followed by Florida, Michigan, and Georgia.
Well, now
has,
wait a
now
minute.
made it into
Did
the
we
top
get
5.
better, or did the other ones just get
I think
worse?
the others got worse.
Okay.
Is what it
I
really
think you
was.
forgot Nevada. Nevada's
Yeah,
actually
Nevada's
number
number
one.
one, yeah.
60%
Yeah,
of the
60%.
mortgages are underwater.
And probably 80% of those
Are
are
in
in Las
Vegas.
Vegas.
Yeah, they are. Vegas really got nailed. And
So that's
for
part of the
Arizona, it's
shadow inventory
Phoenix.
that people talk about, is that is not only is it properties that are in some stage of foreclosure now, but it's the properties that are likely to be in foreclosure in the coming months and years, because they're so far underwater that at some point those homeowners may decide, you know what, it's just not worth it, we're just going to give it back to the bank. And so, kind of what that means, I think, for real estate investors, and this is where I always see the silver lining, is that, I think we're in for a good 3 to 5 year run of real estate being on sale in California, with opportunities to acquire real estate for rental income, as well as acquire real estate that's been foreclosed, or at the auction. If you got cash, you could buy at the auction, to buy real estate that you could acquire at extremely good prices that maybe have upside for equity. A lot of homes coming on the market that my investor clients see, haven't been remodeled in a long time. Maybe the people refinanced the heck out of that property and then gave it back to the bank, and it was built in the 50s or 60s.
And the refi money didn't go into the
And
house
it didn't
either.
go into the house, no. And
It got towed away from the house
but
with the
those
boats.
homes are great opportunities to fix and flip, and that's really what is the beauty.